continue to talk about it, so I do feel like I know.
I continue to talk about it because it's the next Starbucks.
Okay.
Well, I apologize to Howard Schultz. It has the potential to be the next Starbucks if it executes correctly. But they have this problem. They were the first person to talk about the job op problem. That you have a great barista and then immediately they go get a higher price. If you go to see, we used to have our Walgreens here, which is my litmus. The ones where I waited 5 minutes to be able to get a Gillette razor and then decided to leave and got it in Amazon and it came faster. These places are now closed. The hour that was pretty funny. Just went right over. The hours of stores are.
They're actually just playing the various Federal Reserve chairmen talking about what they see with economic data. If you're not familiar, right now up in Wyoming, there's a big economic meeting going on. Federal Reserve people are up there and other various global business people. And they actually, one of the heads of the Fed, I believe it was the Kansas City Fed, was just describing there's a major disconnect right now in the economy between supply and demand, that we're in this weird spot where we didn't have nearly enough stuff to supply the demand, but now we have a lot of supply and the demand is staying sideways or even shrinking in some areas. So that was just kind of interesting. We'll check in. Let's see here. We've got about 20 minutes till the stock market opens. I've got some stuff to go over here with you. So we are ending earnings season. It is coming to an end right now. Here is this week's earnings reports. Quite a lot of interesting ones to hear about. Zoom, they were on Monday. Tuesday, that was 2 days ago. Macy's, that was an interesting one. I'll go over in a minute. Nordstrom's an interesting one. That's usually higher end people that can afford more expensive clothing and those types of things. Advanced Auto Parts, that's an interesting one we should go over. Nvidia, they were an interesting one to hit. Let me see. And then today, Peloton. Peloton was today, and let's just go over them real quick before we get into the energy sector. But before that, you guys, thanks for tuning in. This is Ryan Derks, Stock Market Open, and just again, I like to remind everyone at the beginning of each of these videos what I'm doing and why I'm doing it. I just don't feel like they're whatever television channel or newspaper or what have you. There's a lot of very, very big happenings around the world in the world of finance and economics. That's my full-time job, and I don't see anyone out there talking about a lot of the things that are happening that I see as important, at least. So the whole purpose of this is purely just to make my own financial reporting TV show. None of this is investment advice. Don't be an idiot. None of this is anything you should act on. All those disclosures, think before you act, past performance, no results, all those good things. I'm just trying to do some commentary and communicate to you some happenings in the world. Don't forget, this is live on Facebook, live on YouTube. You guys can comment down in the comments section, and I will reply live as you're talking to me, or as you're chatting with me. So anyway, let me go over here real quick. Let's just pull some of these up. Okay, Macy's. That was an interesting one on their earnings. Macy's reported... Okay, so here, where is which day on here is Tuesday? Anyway, I believe it was right here. Regardless, Macy's came out and Macy's said, yeah, things are okay. We barely, keep in mind, this quarter, most every company projected that they would have less revenue, less sales, and but with that said, they went a little less than what they needed to so that they could come in just looking a little better. Like, for example, Netflix, about 2 weeks ago on their earnings, they said, we expect we're going to lose 2 million subscribers. And then on earnings day, they said, hey, we only lost 900,000 subscribers, not 2 million. And it was like a cause for celebration, which that's how weird everything is right now. Netflix lost 900,000 subscribers, but they somehow spun it as a way to celebrate. Macy's had a very interesting thing they had mentioned. Let me see on their guidance. I should have pulled an actual article up before this, but regardless, Macy's basically said, yeah, okay, so we've got our sales, they're coming through, big deal. But they said, the one interesting thing is they went over, the executive said, but we think that the rest of this year is going to be very tough. and you just got to read between the lines on these, because they can't just come out and say, hey, we think that the consumer is so weak that they really can't even shop at Macy's anymore. But that was one of the interesting things you heard in the Macy's earnings overview. Walmart, I was talking about Nordstrom here. Walmart actually said in their earnings last week they are seeing a lot more consumers that make over $100,000 a year coming to shop at Walmart. However, Nordstrom also said that they find that their consumers still resilient enough to continue. Let's see, Nord. Nordstrom, let's see how they did this week. I'm not sure, I didn't even see. Okay, so, down 25% this week. Oh, crikey, I did not see this one though. Part of their report was, quote, shoppers won't even buy clearance items right now. You guys, that's impossible. We're in one of the strongest economies America has ever known. By the way, this broadcast is brought to you by Pfizer. Okay, most analysts would agree Nordstrom has arguably the best looking department store and customer service in the game. Even those great attributes don't appear to be enough currently, though, as the U.S. consumers shun discretionary purchases like apparel with inflation raging. The stress on consumer budgets has reached a point where a trip to the sales rack at Nordstrom store or a clearance section at a Nordstrom rack are off the table for the time being, execs hinted on an earnings call late Tuesday. Quote, the softening trend was more significant in customer segments with the lowest income profile, while we saw greater resilience in the higher income segments. For example, at the Nordstrom banner, its items with lower average unit retail prices underperformed. Okay, I missed that second part. I had seen the part where they said, hey, yeah, well, our wealthy consumers are resilient. I missed the part where they said, but everybody else is suffering. And that goes right in line with what Walmart said a week or two ago, where they said, we're seeing a lot more quote-unquote high earners come to shop at Walmart now. You guys, the divide between the haves and the have-nots is only getting more and more obvious right now with all the inflation and all this type of stuff. And again, the topic for today is what I'm going to cover a lot of is energy. It's energy, energy, energy. The underlying thing here, it's always energy. Let me see here. Yeah, so Nordstrom shoppers won't even buy clearance items right now. That is surprising. Okay, we come over here, earnings season. Again, why do I like to go over this? Why have I been focusing on earnings season for the last couple of episodes? Because this is a chance when the executives of all these various companies around the country will tell you the truth about how their company is performing. NVIDIA, they did not do so well. They missed their earnings and they are down, not as bad as, say, Nordstrom was, but down 6%. Let me touch on one other thing, actually. Let me go back to Nordstrom for 1 minute. You guys, this is something that we've been seeing all year. The stock market is acting extremely, extremely crazy when you have bad news. Right now, good news isn't great because you're not. Sometimes in the past, you'll see them, a company come out with smashing earnings or numbers, and they'll have something great to say, and the stock might be up 7 or 8 or 9% the next day. That's not really happening this year. In fact, if I remember right, in the first quarter, Microsoft, the third biggest company in the world, had reported that all 3 points of their revenue sources all grew massively, like 20% year over year, and they were down like 2% the next day. That's kind of how crazy this stuff is. But what's even more crazy is when news is bad, it's bad. So here, for example, Nordstrom, even though they said, hey, our wealthy people are still shopping, but they clearly said, yeah, but everything else is just sitting on the rack, so we can't even get rid of clearance. They're down 25%. That is shocking. That's not usually something you see in a normal, healthy, even just sideways economy. They might be down 3 or 4 or 5%. But that just lets you know a lot of the critics of the stock market out there right now, they'll say the stock market is way overinflated. It's been overinflated for decades, and there's a lot of truth to that. This is very shocking when you see a 25% drop on one bad note. So I think what that means, and comment in the sections below or email me, tell me what you think. But when I see that, what that tells me is that the U.S. Economy, the U.S. consumer, all of those types of data points, it's not strong right now, and people are very, very untrusting. Okay, if that makes sense, untrusting of the stock market and the data being put out right now. Let me see. Oh gosh, Peloton. Okay, back to the earnings. There are all sorts of interesting companies here that we could look at. I'm just going to pick out a couple. I am interested to see Gap after today. That'll be this evening, but we won't see it for right now. Also, Ulta. Ulta, you shouldn't expect to see Ulta drop, but let's go here to Peloton and Dollar General. Has Dollar General actually reported yet? DG. It looks like, I don't know that they have reported yet. Okay, yes, they have beat and they have robust guidance, of course, because it's Dollar General, and I figured that much. All right, last company we're going to look at, Peloton. I love Peloton because it's such a dumpster fire. Peloton missed their earnings just this morning, just reported this morning. Oh, what the? Yeah, down 14% so far. The market has not opened 10 minutes until stock market opened. They're down 14% pre-market. Speaking of that, let's see what the market looks like pre-market right now. Okay, sideways, pretty much sideways right now. Yeah, okay. So that's what I'm looking at up here. These futures numbers, all pretty much sideways at the moment. So, okay. Last thing I'm going to show you on earnings. This is Bloomberg about a week and a half, 2 weeks ago. When it comes to earnings season, here's kind of the long and the short, is that earnings really have been decent, but primarily because everyone has been projecting a much lower revenue number. So if you know that it's going to be lower and then you just project it'll be slightly lower than what you think it will be, and it comes in like here, okay, cool, you still beat it. You can still say we beat earnings, but your earnings back, used to be up here. So that's kind of where it's been. Companies are barely, or not, I shouldn't say barely, but they're holding on. They're making it work. But I will say utilities and energy have been destroying. And check this out. This is from Bloomberg.
Earnings very much in focus. We are positive 2 minutes in by 0.5%, up 0.8% on the Nasdaq. Pretty amazing what we've seen in the Nasdaq over the last week. In fact, the last 2 days, given what's been happening with Treasury yields. Yields are much higher, and the Nasdaq looking more and more resilient by the day. On the earnings front, 70% into earnings season here in the United States, with the latest results out from Under Armour, cutting its profit forecast. Let's get the latest with Taylor Riggs. Hey, Taylor.
And John, I think what's interesting, and I'll let you decide how much we've been cutting estimates coming into this earnings season, but I guess the positive news is that about 74% of the companies so far that have reported are actually reporting a beat here on the bottom line, and maybe more better forward-looking guidance. About 34% of those companies are also guiding higher in terms of the bottom line as well, though about 30% guiding lower. Again, though, the big question here is how much had we really cut some of these estimates coming into this earnings season. What goes for the year goes for the earnings season. Energy, utilities, of course, the best performers on a price basis on the S&P 500, and also sort of the best performance in terms of actually the top line surprise here. Maybe showing some of the pricing power and whatnot, at least when we think about some of the inflationary environments underway and the top line translation of that. As we think about going forward, what's left, about a fifth now of the S&P 500 in terms of value is left to report. You still do have a lot of tech, some healthcare, maybe some discretionary. I know Walmart's in there, Home Depot, Eli Lilly, Nvidia.
So so I just wanted to show that to you. That was they've got some interesting breakdowns. Like they said, what did they say? I think she said 25% of companies are expecting higher future earnings and guidance. That's what they call guidance, is what we expect the next 3, 6, 9 months to look like. So if about 30% are saying guidance should be higher, but then 30%, she said, are expecting it to be lower, okay, what about the other 40%? They don't typically just say it'll just stay sideways, but quite a few big names out there were saying, like Macy's yesterday, guidance lower. But regardless, just hold on, y'all. Now, if you guys want to take advantage of where they're talking about the high earnings right there, utilities and energy, that's what I'm going to get into here right now. You could keep it simple. You could look for an ETF that just covers utilities and energy. You could look at Exxon stock. Those are kind of what they're talking about right there. But you got to go do your own research on that stuff. Okay, you guys, I told you, it's all about energy, energy, energy. Now, let's see. We got about 5 minutes till the market opens. Real quick, let's see what there's commercial here. Fox Business. Yeah, okay. Well, not going to bother waiting. They're on commercial as well. So, Energy, energy, energy. You guys, some people watch, you know, a clip from the news and they say, well, gosh, the news says America's looking great. We're doing great. Maybe. Probably not, but maybe. Let's pretend that is the case. Don't forget, it's a global economy. We are so stinking connected that when one country fails, especially a big one, it hurts all of us. Not just a country, but an entire continent as well. This right here, this is a tweet from the other day. German benchmark power price surged over 700 euros per megawatt per hour for the first time today. 14 times the seasonal average over the last 5 years. This is what happens when you combine trying to punish Russia for getting in a fight with Ukraine, which nobody has any right to comment on that unless you're Russian or Ukrainian. There are so many moving parts in Russia and Ukraine. Ukraine was known to be the most corrupt, third world, destabilized country in all of Europe, thanks to the United States getting involved in a coup in 2012, in 2014, and then essentially using it as a money washing operation. That, with everybody trying to say we hate Russia, we're not going to take their energy, that mixed with going green, I think it was it France that just confirmed the other day that they're going to shut down the remaining and not bring online any nuclear reactors, and they should be done by the end of this year? Or was that Germany? Probably one of both, honestly. But you guys, the reason I bring this chart up, it's all about energy. If Europeans cannot afford anything except to pay their heating bill this winter, they're not going to go out and spend money at the soccer game or at the restaurants or to travel to see the United States. All the crap that we sell here in the United States, because we know we don't produce much, if Europeans, this isn't just Germany, this is happening all across Europe, if Europeans, if their entire continent's economy is shrinking, you better believe that it's going to be like a black hole and start slowly sucking in the other countries, Africa, Asia, North America, rest of all of us. We should be counting our blessings that for whatever reason we don't have leaders in America that want to destroy ourselves this badly. Let me show you this also. It goes right in line with what I just showed you on that German electricity price. This was from, what, 3 days ago? 3 days ago. The Belgian Prime Minister is warning Europe faces up to 10 difficult winters. That's 10 years. A decade. A decade of difficult winters. And again, this all goes back to the energy thing. If you guys are going to turn off all of your energy, stop taking energy from Russia, who Russia supplies, what, like 40 or 50% of energy to Europe, and then again, just voluntarily turn off your other energy sources so you can do just windmills and solar. The comment here, 10 seems like a lot. Yeah, I'd say so. I'd say so. So, let's see, we've got about 3 minutes till market open. I'm going to see if I can read this Substack or if the guy wants to charge for it. Yeah, this was a good little tweet here. Just a very brief overview of energy. Basically, it says here, in his excellent Substack note, quote, once the government has accepted that it can't allocate energy using a price mechanism, then the only option left will be energy rationing. The politics of that are going to be exceptionally difficult. Now, for those of you who, I won't say the name of the company, but when I do with our 401ks, we do our annual or even semi-annual in-office meeting just to go over this stuff. If you guys remember, if you're watching right now, what did I warn you? I said watch the energy prices, because if they get out of control because we're turning off all of our energy, the next thing they're going to do is start trying to cap the price of energy, and that's when you know things are about to get bad, because that is a telltale sign of a failed economy, of a primarily failed leadership, resulting in a failed economy. We got 2 minutes till the market open. I'll see if I can read this to you, and then we'll see how the stock market opens with our old friend Jim Cramer. Okay, so I'm going to read this to you about energy prices and what we could expect if this thing does not get better soon. With how leadership is acting towards it. It says here, at one point yesterday morning, gas prices rose by 10%, which in cash terms is roughly equivalent to pre-crisis cost of gas. Now, this was written just a couple days ago. David Shepard, okay, this is written by Duncan Weldon, but he's quoting a tweet from David Shepard. Given they're already 10 times the average last decade, it's going up by the entire amount gas used to cost in one morning. It used to cost 20 euros per megawatt. Today it rose by 25 euros per megawatt. The guy says, I'm an economist. I think price signals are useful. 2 weeks ago, when discussing how governments should respond to rising energy bills on Radio 4, I gave the economist's answer. Let bills rise to keep the price signal while giving households lump sum payments to protect their incomes. So basically what he's saying is the best cure for high prices is high prices. After prices get so high, people will stop doing it and they'll have to come down. He says, but a lot can change in 2 weeks. We have reached the point where European gas pricing is conveying no more useful information. The message at present is crystal clear. There is a serious shortage of energy. You could double prices at this point and we would learn nothing new. Plugging these sorts of numbers into the useful formula starts to give silly answers. Cornwall Insight reckon they imply a domestic energy price cap of over 5,300 euros by Q2 next year. Citi have notched up their UK CPI forecast at 18%. Right now, inflation in Europe is higher than what they will tell us in America. In America, it's close to 20, but they only tell you it's about 8.5. In England right now, they tell you it's 10, even though it's closer to 25. But here they're saying they're forecasting 18%. I'm not questioning the math behind this either, Cornwall or Citi's calculation, but I do not think is either that either is politically tenable. Now I'm going to pause this for one moment so we can see how the market open is working.
Bell and the CNBC Real-Time Exchange at the big board today. The Fund for Public Housing celebrating its 7th year of investing programs.
You guys,
And at the NASDAQ, Achilles,
you'll know exactly what we do on the opening bell, right?
celebrating its recent
There's an infinite amount of cash at the Federal Reserve.
Here we go, green flag. So hot in here. So hot
Yes, that is our unofficial market bell
I haven't
opens.
used the Bitcoin ATM myself.
Jingle.
I don't know if you guys
Made it
have.
myself.
But apparently they've had undiminished demand. In fact, it continues to increase. They've got quite a few of them, and they are going to be taking that company public through a SPAC.
That, of course, through via SPAC, good. It'll be vetted by no one, and you'll have it, and you lose a lot of money and just have a really super good time, Wall Street.
So it's suffice to say you're still very positive on SPACs, I guess.
Yeah, I
like
really.
them.
Well, you know, we do some very good CNBC work on SPACs, and they've been the worst things I've ever seen.
They haven't been great.
Yeah,
By the way, that
worst.
does bring me
Worst
to
things I've ever seen.
one of the biggest ones out there was Grab. Remember that when that went public through a SPAC?
Grab.
You know, we talk Williams.
So, let's see what Varney and his
Just
team
2
has
years
to say
ago,
real
back in
quick.
2020, that was a 5-for-1 stock split then. Now in 2020, the stock reaction afterwards was that the stock actually dropped the day after the split, and it was down around 14%.
Okay, so nothing real exciting. It's a flat day on the stock market at the moment. Yeah, pretty much flat. Nothing real exciting happening, except for, let's just double check in on Peloton. Let's see how bad it is for Peloton. P-E-L. Let's see how bad it is for them right now. Down 15%, you guys. Yeah, this is Peloton, right? This was right before the market opened. Market open. Before market open. Down. Oh, what the heck? Did they really just jump 10% right there? Wow. Oh, sorry. No, they're down still 14.5%. Yeah, so Peloton, they have gotten destroyed. This year they're down 67%. What a terrible company. But look, that is the Silicon Valley method. The Silicon Valley method is don't worry how you're going to be profitable, just take over entire market share. Uber, for example, I mean, look at Uber. Uber is a great example. Uber was losing money, and how long have they been around? They've lost money their entire existence up until just this year. Just this year, they finally turned a profit. But over the lifetime, if you had bought Uber at IPO back in 2019, you'd still be down 30% on the stock. That's how poorly the stock is. And you know what? I love Uber, but that's just how that's just the strategy of these Silicon Valley companies is. Look, once you've captured a little bit of lightning in a bottle, go full speed. Oh, they're talking
15%.
right here.
Imagine you were an
Yeah,
investor.
it says it all. Yeah, exactly. That's not progress. All right.
That's not progress with a nice British accent, just to really rub it in. Okay, y'all, let me get back to how bad this energy thing is in Europe. And again, we'll continue relating this because I've got some stuff to show you that's going to show you it's a lot more than just Europe, and it's coming to you very soon. So the guy says, now if you remember, to recap, he just said that energy prices are raising in one day what they used to raise over the course of like a year or a couple of years. He says here, these sorts of numbers imply widespread poverty among households, a collapse in discretionary spending, utter ruin for many SMEs, and a fair few larger firms too. In reality, the government will not stand idly by and let this happen. The domestic energy price cap will not be allowed to reach 5,000 euros. Firms will receive support with their bills, perhaps not as much as they need, but a substantial amount. Liz Truss may be against handouts, but crises make for unusual outcomes. Gordon Brown, the co-creator of New Labour, found himself nationalizing banks. Boris Johnson, perhaps Britain's most libertarian-inclined prime minister of modern times, found himself placing the nation under house arrest. Rishi Sunak was pushed into increasing the tax burden to its highest level in decades while constantly talking about his love of low taxes. Yeah, politics in England is very, very bizarre. Liz Truss may be, by instinct, Britain's most free marketeer prime minister since the 80s, but she will soon find herself capping prices, ignoring market signals, and overseeing a large bailout of corporate Britain. Just for the record, if you're not familiar with what's happening in England right now, Boris Johnson said he's stepping down. A new prime minister is about to be elected. There are two options. However, both options are both World Economic Forum stooges, so don't expect anything good to happen, no matter if you're a left-leaning or right-leaning individual. Just know that the World Economic Forum owns both of them, and that's very well documented. All right, so he continues. If energy prices stay at their current levels over the next couple of years, then government debt to GDP is heading for 120%. The only question is the route taken rather than the destination. Either the government can directly borrow the money to subsidize energy bills, or it can let prices rip and see debt rise as one price of an even more gut-wrenching recession. A wide-ranging support package to cap bills for households and firms has to be the realistic base case. The trickier decision for the Truss government would come later and be even more unpleasant for them. Dealing with the cost of high energy bills is going to mean a furlough scheme type fiscal outlay, and with interest rates heading up, the cost of servicing that debt is going to be higher too. The room for the kind of wide-ranging permanent tax cuts that Truss supports simply will not exist. The second challenge will be even trickier for the Truss government. The government will have no option other than to suppress the price signal coming from the energy market. But capping prices is one thing. It does not deal with the reality that prices are rising for a reason, a genuine shortage of energy. Once the government has accepted that it can't allocate energy using price mechanism, the only option left will be energy rationing. The politics of that are going to be exceptionally difficult. You guys, I've been trying to say, I've told you a dozen times already during this broadcast, energy, energy, energy. If you're wondering why food is going up, if you're wondering why whatever, it's all underlying energy prices. And if you want to go green, cool, but you need to expect the price for everything to get more and more expensive. Because check this out. Look around your room right now. Look around at everything that's in your room, okay? Everything got to your room using gasoline, oil, and petroleum and other byproducts of natural oil and energy. Not only you driving your car to go get those things, but the semi-trucks moving all of those things to the store or the Amazon that you got them from, all the trucks that were moving all the various parts that, to get them to that one plant where they were all assembled, or the energy it costs to turn those factories' lights on or to power those factories, or this is a plastic lid. That plastic, as you know, byproduct of oil, petroleum. This doesn't work. This doesn't work what's happening, but I thought this was a very, very good way. It was a very simple outlook of what to expect with energy, because politicians, all politicians, every single one of them, Republican, Democrat, Labor, I'm trying to think, what are the parties in England? It's Labor and Tory, I think, right? Aren't those the two big ones? Yeah. Doesn't matter who your politicians are. They are not going to solve this for you. Very few politicians have the cojones to actually take this stuff on. And how do you take it on? Simply, you're not going to like the answer, but you let people dig for oil. You lower regulations on the energy industry. You make it cheaper and easier to move that stuff around. You stop turning off the oil and the energy from Russia and, well, as much as I hate to say it, the Mideast. Also, in the United States, you turn the pipelines back on. You renew the permits. Regardless, here we are. This is where we are. We deal with what's in front of us right now. England and Europe is going to have a very difficult winter. That's for sure. Okay, so energy. I'm not done with energy, because we go over to Poland. This just came out 5 days ago. Poland's biggest chemical company halted production of nitrogen fertilizers and trimmed output of ammonia fertilizers because of record gas prices. So again, now this takes it back to Polish. The production levels have now dropped back to where they were right about mid 2021. Yeah, so they've dropped in about like a week, 2 weeks. They dropped 2 weeks, about a year's worth of output down. Again, it's getting so expensive. Next one, Orlen, also in Poland, halts nitrogen fertilizer output. So not the world's largest. This was the world's largest chemical company. Poland's largest chemical company. This is Poland's largest oil company, saying that it's also halting production until things stabilize. And then this guy here in the comments says, same thing playing out in the United Kingdom. The cure for high natural gas prices is high natural gas prices. CF Industries press release. Quote, at current natural gas and carbon prices, CF Fertilizer UK ammonia production is uneconomical, with marginal costs above 2,000 euros, or pounds I should say, 2,000 pounds per ton, and global ammonia prices at about half that level. You guys, until these politicians get out of the way, this is going to get worse. It's going to get worse. And that is very, very sad. It doesn't have to be this way, but here we are. Continuing. You think that this stuff just happens. It doesn't just happen. This is in Pakistan. These are food riots and energy riots in Pakistan. Now, you guys think it's bad in America? Okay, thankfully we have some money to survive. It's bad in Europe? Yeah, it's bad in Europe, but we have some money to survive. Most of you out there, most of you watching, unless you've backpacked in these types of second and third world countries, you have never seen poverty like what you see in Pakistan or other countries. Pakistan has protests nationwide right now because why? Oh, because fuel prices have triggered inflation across Pakistan, with food prices skyrocketing 42%. People in Pakistan just genuinely can't afford anything. I shouldn't say just anything, but you know, we don't live there, but regardless. Okay, not just Pakistan, also in Argentina. Check this one out. Protests in Argentina after the country's central bank raised its main rate of interest to 69% to combat inflation rates above 70. Here we are freaking out in America if the Fed raises rates to like, what, 1.8%, 1.9%. In Argentina, they're raising interest rates to 69% to beat inflation of 70%. The government is also cutting subsidies for energy and other social benefits. Check out this protest here. This is just from a couple days ago. These people are not protesting out there or cheering because their favorite soccer team just won the World Cup. You know? They're out here because they can't afford anything. Now, like I said a moment ago, you think it's bad in America. Okay, at least we can decently afford stuff. Same within Europe. But these second and third world nations, these guys are already living a very, very low standard of life. Now, Argentina, they're probably more second world. But even so, if you know anything about Argentina, They've had something like 10 currency collapses in the last 15 years. That's how bad and unstable their economy is. Beautiful country, lots of beautiful cities and architecture and food and sights to see and all that, but clean, relatively safe, but their economy is not strong. With this stuff getting tougher in Europe and America, it's getting even more tough in these third world countries, which they've been barely hanging on anyway. They're just straight up falling off. They're straight up falling off the cliff right now. So expect more of this. You saw that in Sri Lanka. You remember about a month ago, you saw massive nationwide protests on that island, Sri Lanka. I would expect seeing more of this. See more of this as food and energy still becomes more and more expensive. Again, it doesn't have to be this way. It doesn't have to be this way. Let me check comments real quick, see if anybody's got any comments here, anything inputs. Not right now. All right, cool. Well, let me take a pause here just to do a little, what do they say, a 10-second station ID. Isn't that what they say on the radio? You guys, this is Ryan Derks. We're 30 minutes into this live broadcast. I just simply, this is stock market open, stock market closed. This broadcast I do is just simply because day to day at my day job, I see a lot of news that is not being reported. And I don't think there's some giant, scheme of why it's not being reported. I just see a lot of very interesting stuff. Maybe there's just too much to honestly report, but the whole purpose of this broadcast is, one, for me to get these various important economic factors out to you, two, have a little bit of back and forth with you all in the comments about various things you're seeing or stocks that you want to talk about, and that's really it. Like I said earlier, don't be an idiot. This is not investment advice. We just like to talk about commentary and make fun of people like Peloton, especially Peloton. Okay, we'll continue. This is my favorite one, you guys. I'm just going to present this to you without any context. Okay? I will give you actually a little bit of context. New York, the state of New York just had elections this week, and a young lady just won. She's maybe in her late 20s. She just won her race to be New York's next state senator, and let's just hear her victory speech. She just found out that she won. I'll just let her do the talking.
I know we're saving the speeches for a little later, but today we really proved that socialism wins. We are not going anywhere, and we will not stop until we see a socialist slate across this city.
All right, cool. I love the energy. Yeah, so that's news to me. The young lady is quite geeked out, and she is revved up. And quote, "We will not stop until we see a socialist slate across this city." That is awesome. I bet she has some really good solutions on how to resolve this energy crisis that we're, tumbling into. So, yeah, this is a young lady. What's her name? Oh, crap, I can't get it to open. Sorry. But, yeah, if you guys didn't know, she proved tonight. Let me have her say it again. She'll tell you again.
Today we really proved that socialism wins.
They proved it, all right? Now go along with it. Enjoy the spoils of a falling empire. Enjoy it. Quit noticing things. All right, I'm so happy for her. I'm sure that she will have some great ideas on what to do with 87,000 new IRS agents, even though she won't have any control over them. She's a state senator. But okay, a couple other things. The beautiful, handsome, very intelligent, coming in at astounding 5'2" tall, French President Emmanuel Macron, just a couple days ago, he let us know that, quote, the end of abundance. And we need to make that right now we're in the end of abundance, and we need to start sacrificing freedoms.
What we are living through is a time of great upheaval. Firstly, because we are witnessing, and not just since this summer, but over the past few years, the end of what we might have seen as abundance. And for those who enjoyed it, it is also the end of a carefree time. Our freedom, the liberty to which we have grown accustomed to in our lives, has a price, and sometimes when we have to defend it, we have to make certain sacrifices as we fight to defend it.
So what is he talking about? He's talking about how much money we have to send to Ukraine. He says, stop asking questions that we're sending all of your money to Ukraine. Stop asking questions that you guys are having a tough time affording food and affording your energy, and rent is extremely difficult right now to make ends meet. We need to send all this money to Ukraine, you guys. You wouldn't get it. You're not elected. You're not official. You're not a World Economic Forum sponsored politician. You just wouldn't get it. However, don't forget, as the top comment says here, private jets won't be restricted. You guys, again, it's very difficult. There's lots of ins, lots of outs, lots of interested parties in this. Just know that your time of abundance, he said, the time of relative easy living, and the freedoms and the liberties you enjoy, those are all going away. But I won't get into the details. There's a lot of moving parts. But just know that Europe is about to do what Japanese call seppuku. I think, is that even how you pronounce it? Seppuku, seppuku. No, that's not it. How do you even pronounce the word, you guys? It's when the Japanese honor suicide themselves. Europe is suiciding themselves. And I just wanted to read this top comment here. He says, the end of abundance translates to, quote, the people's standard of living being lowered so the elite class can have more abundance and control us. Yeah, so essentially that's exactly what's happening. All right, cool. Let's move off of energy for a minute. What do you say? What do you say? I'm not going to bother with that. We kind of already went over England. That's enough of them. Evergrande. This actually honestly needs to be an episode of itself. In fact, I'm considering doing this where I'm just going to start doing standalone episodes on single topics. If you guys are not watching what's happening on this Evergrande thing, okay, Evergrande, it's China's largest real estate developer. You see the ghost cities. You see those cities of 20 and 50 apartment towers, 200 stories tall that no one lives in. It's Evergrande that's been building all of those. I think they're like the 4th largest real estate company in the world. There is so much speculation as to what's going on behind the scenes in the crypto world with Tether stablecoin. And what they've been saying is they think that Tether stablecoin has a lot of Evergrande commercial bonds propping it up, which would be, regardless, the Tether thing is a total scam anyway. And there's a ton of circumstantial evidence showing that Tether does actually hold a lot of this Evergrande Chinese real estate debt. Why is this a big deal? Why am I talking about Tether crypto along with Chinese real estate? Well, because Evergrande shares value dropped to 0. So Evergrande has been delaying and kicking the can down the road for about a year. It's been officially a few months ago put into basically bankruptcy, and China's government is basically just making its payments for it. And if I'm not mistaken, they even just stopped paying foreign note holders. So like if you were an Australian bank, they're just not even paying you anymore on what you're owed. It's basically essentially a zombie stock. There's nothing to it. It's just going to collapse in on itself. When it's going to do that, you're going to see a Chinese real estate market, which real estate in China is something like 40% of the nation's wealth, or like 50% of the nation's wealth is tied up in real estate. Not only that, but BlackRock and HSBC, yes, the BlackRock that is trying to buy up all these neighborhoods, are the largest buyers of Evergrande debt. Again, this is all just relatively new. However, this guy has an interesting comment on the Evergrande thing. Let me see. And BlackRock. Okay, never mind. You know what? I should have prepared a little better on this one. I don't have the other article that just goes into detail, and this one is from 2021, so I'm just going to skip this, but apologize for, leading you on like that. I'll be more prepared if I'm going to do these next time. Okay, hey guys, things are going so well that not only on a Monday do we argue about what the definition of a recession is, but on a Wednesday, Ford confirms layoffs, says it is cutting about 3,000 jobs. Hey, do you remember in the last episode when we went over all of the tech industry jobs that are being shut down, job openings closed, people being fired? You remember the CEO of Google said if you guys don't perform, there will be blood in the streets from the number of people we fire. Things are going really well right now. The economy is so good that we are now forgiving student loans. In fact, the economy is so strong that we have not made anyone pay a student loan for 2 years now, and the economy is so strong and so helpful and so, like, I just have so much optimism that Ford is confirming layoffs as of yesterday. Also Peloton is down 80% this year. So let's see here. You guys, again, this is from Bloomberg. A tsunami of shutoffs. 20 million U.S. homes are behind on their energy bills. Surging electricity prices spur worst ever crisis in late utility payments. Okay, y'all, I've told you the topic, the whole purpose of this broadcast that I'm doing is to put these news articles out there that I see that seem important. Have you guys seen this in the news? I haven't seen this in the news. It says here about 1 in 6 American households are behind on their utility bills, the highest number on record, according to National Energy Assistance Directors Association. Oh, okay, so I read it off of Zero Hedge's blog because Bloomberg has a paywall. It says here, at least 20 million households, or about 1 in 6, are behind on their power bills as soaring electricity prices spark what is said to be the worst ever crisis in late utility bills, according to Bloomberg, citing data from the NEADA. The NEADA said electricity prices have increased significantly since 2020 after a decade of stagnation. The steep rise has resulted in billions of dollars in overdue power bills. Electricity inflation is being propelled by soaring costs of energy, fossil fuels such as natural gas, coal, and petroleum. What did we just go over earlier? This is affecting everyone, not just Europe, not just whoever. Natural fuel, what's this? Okay, so this is electricity prices here in America right now. They are not nearly as bad as the chart I showed you across Germany, but they are not good. Natural gas, again, not nearly as bad as Germany, but it's got that same spike going straight up. The chart below shows for the 2 decades, real electricity prices were relatively flat except for the commodity boom times around 2008. Now, inflation, less energy has peaked through electricity, though electricity continues to rise to a blistering 30% year on year. Utility shutoffs have become more common across the USA as some lower tier households are thousands of dollars behind on their power bills. You guys, you do the math. You guys are already feeling the pinch when you go to the grocery store and you see that you're getting less, you know, the Doritos bag, they're filling the Doritos bag even less with chips, more air, right? And they're charging you more for it. Your food is more expensive. Your energy is more expensive. How many, 1 in 6 people are behind on energy bills? We're forgiving student loans. Ford is cutting jobs. Tech companies are freezing and firing people left and right. You tell me. Let me go to the next one here. CNBC reports, and I'll read this. All right. Yeah, I'll just... No, okay. Yeah, CNBC reports about 46% of renters in the United States are struggling to make ends meet, according to Harvard University researchers. Here's what some experts are saying can be done to make housing more attainable. Okay, so I'm not going to go into the whole, you know, hey, I've got a PhD and whatever, here's how we can make things more affordable. Now, hang on a second. Where was the article? Hang on, if I just search it, I'm sure it'll come up. Where is the stinking article? You guys, again, I apologize. Where was the Harvard article? It just keeps going into how to make housing more affordable. Probably written by that young girl from New York who said socialism wins. All right, I apologize again. My bad, you guys. This is what happens when you watch kind of a broadcast put on by an individual and not by an entire group of like 50 people. You know, you look at Sean Hannity or Rachel Maddow. They just simply read a teleprompter. They have a whole team of like 50 people behind them. I had the article that actually linked to the Harvard University research, but okay, so not only do we have 1 in 6 Americans who are potentially thousands of dollars behind on your energy bills, but also about 46% of renters in the U.S. are struggling to make ends meet, according to Harvard University. You top that with, we already knew before the pandemic, the quote, pandemic, okay, before the virus came out and was in everyone's face, what was it? The average American couldn't afford like a $600 emergency. I just don't get it. I know that you do, and I know I do, but I don't get it. Okay, let me go on to this next question here. China, for many this is actually, okay, hang on. I think I'm going to kind of wind this down on this topic. Just 1 minute here. Let me see. Okay, yeah, I'm going to wind it down on this video because this is actually an interesting video that China may actually be losing a lot of businesses to America and other countries right now. So let me close out on a couple things. Peter Schiff here, he tweeted the other day, July new home sales crashed 12.5%, a much bigger fall than was expected. Year-over-year sales have collapsed 29%. New home sales have now dropped during the last 6 of 7 months and are at the lowest level since January of 2016. The supply of unsold new homes is at its highest since March of 2009. So, the last time new homes were this unaffordable, the nation had just experienced a financial crisis. The U.S. economy was in the worst recession since the Depression, and the S&P was at the bottom of a 40% bear market decline. Yet, experts claim now the economy is strong. Interesting. Okay, now this is an interesting tweet. All right, so the Federal Reserve has been saying all year, hey, we're getting responsible. We're not going to keep buying all this debt. We're going to unwind all this debt, and we're going to, lighten our balance sheet. You guys in the banks and in the various industries, you need to get it together, not us. So, if you didn't know, back in 2020 when lockdown happened and all of that, the Fed, really during the Obama and the Trump years, was just buying up all sorts of debt. But during 2020, the Fed came out and said, look, we're just going to buy it all. We'll buy all the stocks. We'll buy all the corporate. We'll buy all the bonds. We'll buy all the real estate. We'll buy all the notes. We'll buy all the everything. We'll buy it. Whatever's out there, if nobody's buying it, we will buy it. So basically the Fed owns everything, and that's no joke. Essentially they own everything. But they've been saying for the last year, okay, well, we've really screwed up. Inflation is way too high. It's getting even worse. We're going to start selling this stuff, which is going to be terrible for the economy because it's already extremely fragile. It can't take the Fed just dumping all this out there without crashing everything. Regardless, as of August 23rd, the Fed bids 2-year notes for a total of $6 billion. They just bought $6 billion more of U.S. debt. What in the heck is that? They said they were going to stop, not only stop buying, but start selling things. And this isn't the first time. Last quarter, they did the same thing. They bought a lot of stuff also. So this guy tweets and says, hey, I know you all are doing the super hawkish tightening, like letting the securities, quote, run off and stuff, but what the heck is this? Why did the Fed feel the need to buy $6 billion of 2-year notes today? Is it like an addiction? Well, the reason they're buying notes is because nobody else wants them. If you remember, I believe it was 1 month or 2 months ago, there was the monthly open market sale of mortgage-backed securities, and there were 0 bidders. No one in America bid to buy these mortgage-backed securities, meaning same thing in 2008. That's what crashed everything back then, were all of your home loans packaged up into an investment fund. Nobody bought them a couple months ago. 0. So the Fed, at the last minute, right before the auction closed, the Fed came in and boom, bought them all. Same here. So hey, I'm just asking. Maybe you guys can tell me what's going on. And we already know the answer. So, here, this top comment, just to be, balanced, if you will, this top comment does say, because the Fed has about $26 billion in U.S. Treasuries maturing on the 31st and only $7 billion on the 30th roll-off cap. So he says mechanics matter. He says they're buying right now because they have so much they're selling very soon, and that kind of helps balance out and ease the crash. But regardless, okay. All right, let's see here. Just last.
It only applies to new shares. The actual
like,
reduction
looks
of
here,
shares.
Salesforce, they had their earnings today. It looks like they missed their earnings. I'm going to guess if they're down 7% today, they must have missed their earnings.
But yeah, Salesforce is getting hit. And again, he said, like we do, we have talked to hundreds of business leaders and economists and leaders in other industries as well, and said nobody quite has the same story. There is still a lot of diversion of opinion, which means, well, let's wait and pull back a little bit.
Right. So sort of an echo of what ServiceNow told us a few weeks ago. But for the time being, CRM is the worst Dow stock and the second worst S&P name this morning. Meanwhile, Jackson Hole, the economic symposium kicks off today. Our senior economics reporter Steve Leisman is there alongside the president.
That's a very interesting thing he said there at the very last second. Right there at the very last second, the guy said that all of these various economic surveys that are going around among business owners and industry leaders and executives at Fortune 500 companies. I have an article, and I'm not going to pull it up because I can't find it. I mean, I could, but I'm not going to make you wait, is what I mean. Some headlines here. Right here. This is from Fox Business. All right, so Fox Business reported numerous companies across the United States are planning to trim their employee numbers. Survey: half of American companies set to cut jobs after hiring surge. Quote, that's according to a new survey published on Thursday by consultants PricewaterhouseCoopers, which last month polled more than 700 U.S. executives and board members from various industries. About half of them who responded say they are preparing to reduce headcount or already have, while 52% of respondents have already implemented hiring freezes. On top of that, roughly 46% of companies are either dropping or reducing signing bonuses, which became commonplace over the last year. You guys, I'm going to end this broadcast on a decent note, or just an interesting note at a minimum. All right, check this out. China, for many reasons, is making it difficult for foreign companies to do business there. China today is a lot like what we used to talk about as Big Brother. I'm only going to play about the first 60 seconds, but they describe how China is actually starting to scare away a lot of investors. And now, does that mean we'll get manufacturing back in America? Pray on it, y'all. Pray on it. Pray we get those rust belts fixed up, but I don't think so. But check this out.
Apple reportedly moving the manufacturing, or at least part of the manufacturing, of its new iPhone in India much earlier than normal compared with earlier models, a sign the company may be shifting capacity away from China, and Apple is not alone. According to data from the Reshoring Initiative, companies are announcing at record rates the intention to bring manufacturing jobs back to America, with nearly 350,000 announcements. I guess that would be 350,000 job announcements projected this year. Our next guest helped companies do business in China and says he's seeing an acceleration of businesses assessing whether it is worth it to stay long-term over there. Back with us again is Dennis Unkovic, partner at Meyer Unkovic & Scott, veteran China watcher. Dennis, good to have you back. We noted Apple seems to be moving some of its manufacturing of its latest iPhone version, or the one that will come out, to India sooner than has normally been the case. Is this what smart companies increasingly are going to do, move manufacturing away from China?
Tyler, thanks for inviting me and Courtney back again. The answer is yes. Frankly, I think Apple's a little late to the party. They probably should have done this earlier, but what we see happening is China, for many reasons, other than the very expensive labor market it has, is making it more difficult for foreign companies to do business there. And I think Apple's sort of hedging its bets by going to India, and I think they're doing the right thing.
How are they making it more difficult? I mean, obviously, Xi has complete control of the economy. They have been beset with power problems. They have been beset with COVID problems. But what are they doing that's making it harder for non-Chinese companies to do business there?
There are a couple of things. The first thing is the Chinese are very determined to get intellectual property in whatever way they can. And if you're a company with intellectual property that you want to protect, you have to be very careful being there in China. Secondly, the Chinese are today encouraging companies, either if you have a joint venture there or if you have your own operations there, to put people from the government on your boards of directors and overseeing. And so China today is a lot like what we used to talk about years ago, Big Brother. And so as China becomes a more powerful economic force, it's the second in the world, it wants to put enormous pressure on companies, and companies that are particularly technology-based don't like that.
So this makes sense to me, but
So like I said, I'm not going to show you all. I won't make you sit through the whole thing, but I thought that was very interesting. 350,000 potential companies or announcements or jobs coming back to America. Now, it's not all good. People aren't coming back to America in droves. Like you said, Apple is planning to just send it all to India. And if you continue watching the video, they actually go into detail how a lot of this is going to places like India, Indonesia, Philippines, those types of places where they can still get rock bottom prices. I think they had said, was it Indonesia, where the daily average wage is like $1 an hour? I mean, $1 a day, or like $2 a day. So don't think that all of these jobs are coming back. I wish they were. Here on YouTube, we got a comment says, I miss President Trump and his economy. I do agree. I do miss a leader who at least was fighting for America, who was constantly threatening American companies for leaving. But you know what? At a minimum, that was the best thing he did. If we just want to find one good thing, that's the one good thing, that at least he was constantly fighting to bring those back. So you guys, that's all I got for you today. I've got a lot more stuff, but you know, I like to keep these at about 1 hour or less. So feel free to email me, DM me, comment. I'll always respond in the comments, even if it's a couple days old. So you guys take care. Oh wait, hang on a second. Yeah, okay. All right, that's all I see right now. All right, y'all. Thanks for watching. See you later.